The jobs report was way too good. So why is Wall Street panicking? Well, this is breaking news. The economy just dropped a bombshell that's sending shockwaves through Wall Street. 256,000 new jobs, absolutely crushing expectations of 150,000. The unemployment rate is now down to 4.1%. But here's what people are struggling with, including me. This good news is causing absolute panic in the financial markets. But first, you need to understand what just happened to our economy. Look, here's why Wall Street is freaking out. Before this jobs report dropped, there was a 93.1% chance the Fed would cut rates. Now, those odds have absolutely plummeted. We're talking about a complete reversal of what everyone was expecting for 2025. And here's what's really shocking. The probability of no March rate cuts just jumped from 57.7% to 74%. And the translation there is the chances of getting relief from high rates are vanishing fast. And this isn't just about numbers on a screen. This is about your money, your investments, and your financial future. So here's what this means for different parts of the market. First, the stock market is taking a massive hit. Growth stocks are getting crushed, the tech sector is particularly vulnerable, and we're seeing traditional safe havens getting incredibly crowded. That's what it looks like right now. We'll see what it looks like at the end of the day. But over in the bond market, total chaos there too. Yields are jumping higher, the treasury markets are in disarray, and fixed income investors are scrambling to reposition themselves. And don't even get me started on the banking sector. Loan activity is freezing up, credit markets are tightening, and traditional financing is getting harder and harder to find by the day. But here's what most people are missing completely. While everyone's panicking about stocks and bonds, a massive opportunity is forming in an unexpected place. You see, during every single period of market uncertainty in the last 50 years, one asset class has consistently created more millionaires than any other. And right now, it's happening again. Now, you might be thinking, wait, real estate? This market? Yes, I'm about to show you why this jobs report just created the perfect storm for real estate investors. First off, strong employment equals strong rental demand. More employed workers need housing. Higher wages support rising rents. But here's where it gets really interesting. These higher rates are actually creating less competition. We're seeing institutional buyers pulling back, fewer traditional buyers in the market, and more motivated sellers that are emerging every single day. And the best part, all this market confusion is creating incredible opportunities. We're seeing pricing inefficiencies pop up everywhere, negotiating power shifting dramatically towards buyers, and creative financing becoming increasingly valuable. Let me show you how smart investors are adapting to this new reality right now. They're finding motivated sellers, properties that have been sitting for, say, 90 plus days on the market, expired listings, failed traditional sales. They're using creative financing. Everything from seller financing opportunities to rate buy-down strategies to sub-twos to private money networks, and they're maximizing cash flow through multi-unit conversions, value-add opportunities, and utility optimization. So while Wall Street is panicking about the jobs report, here's your real opportunity. You've got a strong job market creating reliable tenants, higher rates reducing your competition, and market fear producing motivated sellers. It's literally the perfect conditions for building real wealth. But listen, this window is not going to stay open long. As soon as Wall Street digests this jobs data and adjusts these opportunities, they're going to start to vanish. So you've got three choices. You can sit on the sidelines and watch, try to figure it all out alone, or use a proven blueprint to take advantage of this market shift. Meaning, if I could show you how to get a cash flowing property, and I could guarantee your success with your first deal in the next 45 days without using your own money or credit, would you be opposed to hopping on the phone to discuss? Either way, the jobs report just changed the game completely for this year. The question is, which side of this opportunity will you be on? Go to reiace.com, we'll hop on the phone and guarantee you're on the winning side. Thanks for watching. I'll see you next time. Take care.